Hello everyone and welcome back to another weekly update of the S&P 500 here. Let me start out by saying the following. You sometimes nail the absolute top just to realize it wasn't the top. This is exactly what happened to me last week, but let me quickly explain to you why I took this short. First of all, we still had this unfilled fair value gap on the daily as well as on the weekly, going back to the breakdown from August 2022, and at the same time it was lining up right with the 618 if you pull it all the way down from this top at the end of March 2022 to our absolute bottom, current bottom at the least, and this was enough confluence for me to try and take a short. Let's have a quick look at how this all played out. As you can see, not too well. Nonetheless, did I lose money? Luckily not. Let me explain or show to you why I didn't, because I tend to manage my longer term trades on the 4-hour time frame that you see here on the right. I got stopped out at break even. Why? Because once we had this market structure break here on the 4-hour time frame, for me it was clear that price shouldn't really be coming back to my entry, so I set my stop to break even, which goes to show one more time why I always say and believe you have to know what you're looking for, but you also have to know why you are looking for it. I had my clear reasons for entry, and I had a clear reason to move my stop because we had broken down on the 4-hour time frame, so I really didn't want price to come back here, especially not in a bullish trend that we are in at the moment. Zooming back out to the daily time frame, where do we then stand now on the charts? Is it probably not the time to be bearish, but also not the time to buy either right now? That is what we want to address today, and for that let's go back to the basics. Let's keep it simple, and this way develop a clear bias and plan. For that, as always, let's start our analysis on the higher time frames, the monthly. Looking at the monthly chart here, it by now should be absolutely clear to everyone that we are in a monthly uptrend. Again, if we add our levels, we see that especially this liquidity, pool of liquidity at around $4,331 should be of interest next. So what I could potentially see us do is obviously go for this liquidity before we then might run the other side one more time and go for this pool of liquidity resting at around $4,060. As you will see on the lower time frames, these numbers come up again and again. Adding also our monthly boxes, you see that this does make a lot of sense, as the pool of liquidity starting at around $4,331 lines up nicely with the next bearish target box. And should we then afterwards also pull back and run the lows at around $4,066, this might finally then mean that we come back to this bullish monthly target box that we still haven't hit yet. At the beginning of the video, I said that I really want to keep it simple today, looking at the basics. But what are the basics? For me, they really are: look at the trend, identify areas of interest, which normally should be pools of liquidity, fair value gaps, and target boxes, and based on all of that, have a plan on how to enter if hit. So let's keep going exactly like that and zoom into the weekly chart then. Looking at the weekly here and getting rid of our monthly levels and boxes at the moment, again we can see that we are clearly in a strong weekly uptrend, and we have massive news as well. And this news being, we have finally broken the longer term weekly downtrend. If you take this latest lower high before the final lower low, we have broken it on a closing basis here on Tuesday, the 30th of May, and thus this is big news. However, not only are we approaching this pool of liquidity that we already talked about on the monthly, but also we have simply entered a new weekly fair value gap. Let's visualize that by throwing on our weekly boxes. So you see this weekly fair value gap starts at around $4,306 and goes all the way up to around $4,375. Now, obviously we are still within this bearish target box. However, I don't give it too much importance anymore as we have nearly crossed it. Nonetheless, pulling a fib from this top from December 21, so the all-time high basically, all the way down to our low. What do we see? This next weekly fair value gap and also the pool of liquidity lines up very nicely with this new weekly bearish target box that I would definitely make sure I have on my chart. Then let's quickly also look at the other levels that we have here, and first of all start with our target boxes. Here we can see that definitely we want to adjust these target boxes, move them up. If we take this fib pull from the absolute low, we see that our first target box starts at around 3,856, which lines up nicely with liquidity as well. Then if we, for example, take this as a major swing low, we also want to adjust this target box to the level of around 4,045. One more time. What do you realize? This simply lines up with this pool of liquidity, the level of around 4,068 that we have talked about before. And the closest weekly target box that you want to pay attention to if you are playing the lower time frames, obviously, is this box at starting at around $4,192. So let's also put that on our chart. Finally, we do realize that this fair value gap doesn't potentially serve of too much interest anymore. However, we have a new week opening gap starting at around 4,237, and I assume that this level will be retested. Let's finally repeat this whole exercise one more time on the daily time frame to get more context. Here on the daily time frame, let me get rid of all of this, not to clutter our chart too much. I personally believe that this level of around 4,240, 4,230 will be of utmost importance, and let me explain to you why. Obviously, first of all, we've mentioned it before, we have a weekly opening gap resting around here. But obviously, secondly, what do we also find here? Additionally, our daily target box, bullish target box, mind you. So should we get down there, you would expect a reaction on the daily time frame, obviously. And finally, seeing whether we can get a reaction in this area and then move further up will be the big telltale sign for me whether we are looking at a bigger top here, should we reject or not. If you have watched any of my videos before, you may be familiar with squeeze boxes, which for me are a real sign that we are looking at a range. And if we mark out this last squeeze range that we were trapped within for over a month, and do the same again for this high, which created another squeeze, then you see that we are looking at a whole zone which definitely should act as support. And if it doesn't, if this area can't serve as support, then personally I lean heavily towards all of this becoming a deviation before the real move down. Getting rid of our cheat sheet indicators one more time. Let's finalize the daily analysis with also throwing on our daily levels. And here I would pay utmost attention to this level of around 4,188. Why? Because it marks the aggressive higher low on the daily chart. You really don't want to see it broken on a closing basis for the daily trend to stay intact. Also lining up with it at around 4,174 daily liquidity, both resting or sitting within this weekly target box that we talked about. Before we sum up, let's look at the sentiment in the market as well. And please, if you found any value so far, please like and subscribe the videos. Support me and my work. I love to do it, but it is hard work. So let's jump right to the sentiment tab. As you can see, the fear and greed index is where right within greed. You don't want to be longing the market once you are in the greedy zone, at least not in the bigger picture. Why? Let me show you. Switching to the timeline here of the fear and greed index, when did we have something similar for the last time? An extended period of us being in the greedy zone and then pushing up into this extreme greed at the end of November, beginning of December. And what did that mark in the charts? Let's zoom out a little bit and show you 1st of December when we entered extreme greed, first sell-off, taking out all the stops, second sell-off. You can repeat that game one more time. We were in the greedy zone at the end of January, pushed up into absolute greed at the beginning of February. And what happened in the charts? 7th of February, our final push up before the bigger push down. So keep that in mind. We are in the greedy zone, and this potentially means that you are going to see a big pullback. So summing up, what do I want to leave you with here today? Definitely don't be too bearish, as we have seen that we are in a strong monthly uptrend. The weekly longer term downtrend is finally broken, and we have shown real strengths at resistance, which always is a good sign for more continuation up. At the same time, I wouldn't be risk on or all in either. Why? For the simple fact that even so we have broken one resistance, we seem to be entering the next area of resistance. Also, don't forget, we may be looking at a daily deviation. However, for you to trade, something needs to break, at least on the lower time frames. And finally, we are in a market feeling or sentiment of greed, and this has never bode well for you and buying or longing the market. Hopefully you did find value in my video again today. If you did so, please like and subscribe, help me and the channel. And with that, until next time, bye bye guys.